Welcome to TradeTheMBI.com. This is John. This report is for the 8th of May. And we had a brief continuation from the other day. We hit up against the 50% here for the ES. Much stronger, as we pointed out before, on the NQ. But rise and shakeout. We can see now that we're starting with the rise of the orange. That could actually produce a little bit of weakness at the same time you have falling steel. The fact that shorts are right here in the cyan, still below zero, is helpful in maintaining, reasonable support levels. That early expenditure of the fund money, whether or not it'll be able to sustain itself, and that 50% is going to become critical to be above. So pay attention to those numbers. We hit right at it. It was at 2679.75. You can see we got just over it at 81.50, but closed significantly below it. And here from an NQ standpoint, you can see we're past it, but approaching the 61. So it's like almost a full zone ahead of the S&P. From a euro standpoint, the decline continues to roll along. We expect it to go. I added the Fibonacci's in here just so that you can get a clear visual on exactly what this has looked like. But potentially we're starting with our first day where we're not below the red line, though it is a little early to suggest that, but all these previous days have still been below the red line. Complete exodus out of the euro because the central bank doesn't need to support it at this particular point with the weaker numbers coming out of the US. The pressure to raise rates in America has faded a bit. Surprisingly, that did not help treasuries in this particular case. But then again, we expect as soon as we get a complete sell, which is just about to start here, we should retrace those lows. And of course, oil rising. This is going to be the later second half of the year, right before election time, should start having an impact inflationary wise, and we'll see how the Fed reacts to that. That should also cause gold to spike. So we're getting some odd and peculiar. There was actually a very good article about treasuries in that on Zero Hedge. If you want to check it out, it's kind of you've got to have a pretty clear understanding of the relationship between money supply and what we've been talking about as far as quantitative easing, and the fact that it hasn't materialized in real dollars until now. You're starting for the first time to have banks willing to loan to individuals as opposed to just buying up treasuries, and that will definitely have a monetization effect of all of that quantitative easing that's been going on for the last decade, and that will produce some potentially interesting results going forward. So really going to be interesting to see how that plays out, and it could put pressure on the market, because if you have an alternative place to put money, even though the article was suggesting that it's quite foolish to want to be investing in treasuries at this particular point, it belies some of the risk versus reward aspects. Turning to the ES5K here we go. So start of the day, it wasn't a whole lot to do. We just kind of ramped up. We had a couple of little decent sell signals that popped up in between there, and we finally peaked up towards the end of the day with another sell signal that brought us to the lows. We really needed to retrace here. There are a whole lot of levels below this, though, that needed. I think I've marked this one as the 2636 is the original start of all of the positive extremes from the breakout. So it gives you an idea, and then there's just a ton of levels. Every one of these is all positive extremes right here. The ones right here almost got filled. Well, they did on this particular case, but right back here, you have to go down to right here is the last level, 2656 range. We're still significantly above that, but worth noting. Pay attention to it. And then you have it from a broader perspective, and interesting again, on the retrace, 50%. Has been rejected so far, so you dip below red line back here at the start of the market open, so we would expect to revisit that. And then also the dip right here was another interesting one, because you dip down right here, and this is always critical, made a lower low on the higher extreme. this will be something I'll also be indicating on the paint bars coming up, because it becomes valuable when looking at the resets. Now, oftentimes what you'll get on this first one is that dip below the orange for a buy. In this particular case, it didn't come till the secondary one, but it's worth noting in a practical one because it usually gives you the clue as to the second more powerful dip that most people are terrified is going to, fall to the end of the earth, but usually is the one that finds the support after they've cleared all the stops and then takes off from there. So all in all, it's pretty straightforward what's going on now. I think that we're going to start seeing a little bit more mixed action now that the initial fund money has been plotted through, and now we can start to get some of that back and forth movement that should be indicative of the time right now, simply because with earnings and that, you're going to get hits and misses, and that's going to create some of the volatility that should cause us to bounce around. But in general, things are still operating fairly smoothly, and unless there's major upset, of course, we have the Iran announcement later market time. That is certainly going to have an impact on oil and could also impact the market if there's disruption ideas in the global mix. So worth noting, and just be prepared for it. I think it's supposed to happen around 2 p.m. Eastern. But as always, though, I will put up charts as necessary and continue to give you any updates on paint bar status and that. But as always, trade well.